Hey friends, and welcome to Technical Shorts with LJ. In this session, I will try to explain or demonstrate how do you identify confluences, and based on the confluences, how do you identify a trade setup and take a trade. So we'll see, a life cycle of a trade, right to the start, right from start to the end. This is not a completed trade as of yet. This is a live trade, but I want to demonstrate, what are the things which I look for, or which one should look for before taking a trade, and how do you identify where do you want to keep your stop loss and what should be a target price. So saying that, let's try to focus on what we have on screen. So we have here open uh, the charts of wheat on a hourly time frame, and I have said this before that all my trades I usually take on hourly time frame. I mean, of course, you can try to trade on different time frames, but for me, I think the hourly is the best time frame, because if you go a bit on the lower side of time frame, you usually get distortion and noise, and if you go on the higher side, then it tends to be, big, maybe positional, or trade is taking longer time to execute. So for me, the hourly is a perfect time frame. Saying that, so as I said, this is basically charts of wheat, and we are on a hourly time frame. Now this is a live trade, so the trade is still active. We have not hit the target price. So before that, I want to give a disclaimer that this is not a recommendation for a buy or a sell. This is only for educational purposes. Saying that, let's see, the trade here. So as you can see, I have, taken that a short position in wheat, and my entry was roughly around 639ish. And if you see, this is a trade of risk reward 1:3, which is a very ideal trade. And then I have a target price set here, roughly around 621ish or 622ish, and I have a stop loss here, roughly around 645ish. Now what are the things which, you know I looked at, or what are the conferences I actually saw to identify this trade setup and to take the trade. So let's discuss in detail. What are the conferences? So the first conference I saw. I mean, I was looking at this trade setup for quite a while. So first conference I saw was the double top here. So let me just show you. So this is a double. Let me just open the polyline so I can highlight things as we go. So look at this. This is a double top here. Okay. So this was the first conference I got. Now I could very well take a trade on double top, but if you look at the setup, it was not favoring risk reward. So as you know, double top, what are the targets and stop loss for double top? So this was not favoring a risk reward. I think it was just, if you look at the stop loss risk reward, it was roughly around 1:1. So I did not like the risk reward, so I did not go on the double top. Again, double top is also a bearish signal. You can very well, but for me, it was not the appropriate risk reward, so I did not go for the trade for double top. But this was, the first conference I got. Now, let me just highlight it here. Maybe I'll just, yeah. So this is double top. Okay. Now the second conference which I got was the break in the trend. So as you can see, you know, as you can see, we have a trend line here forming. Okay, and this trend line actually was broken by this red candle here. So look at this red candle. Let me just get rid of this double top indicator here. So look at this red candle here. It's a very strong red candle. So it clearly gives you an indication that the trend has broken. Now this trend has been from 3rd of August, and when did it break here? 9th of August. So the trend has clearly broken here. uptrend has clearly broken. So this is the second confluence. And look at the red candle. The red candle itself gives you an, the size of the red candle actually tells you, how strongly the trend has broken. So this is the second confluence. But again, there is not a appropriate setup for the trade. Now look at this one. So this is a flag here. Let me highlight that flag probably a bit darker here. So this is a flag here. So see the flag here, and you have the pole and the consolidation here. So, and then if you can see, the flag gave a breakdown here, and then once it's broken down, it also gave us a confirmation there, and then and you can see prices trying to go in the downward direction. It did actually come here to try and retouch the price here, but if you can see, the general indication is down here. So this flag actually added another confluence on the bearish side. That is my third confluence. And if you look at the flag, how to trade a flag, I mean, I have a video. If you go to my channel, there is a video on how to trade flags. So if you look at this flag, the risk reward for this flag is the ideal for this trade setup. So when I go look at this trade setup, which is 1:3, it is a perfect trade setup for me. And this was the third conference which I got. So the first was this double top which we discussed, then the second the break in the trend, and the third is the flag. So the combining all these conferences, the charts are clearly saying that the price wants to go down. So, and based on the flag, bearish flag, I have taken a trade, and the stop loss, as I said, is roughly around the 645 46ish mark, and then the target is roughly around 621ish mark. So this is based on the flag. Now another thing which I want to show you, see this box here. So this box is also known as the Davos box, and the prices are consolidating inside the box. Like look at the peaks, and look at the bottom wicks here. They're trying to consolidate it, and then eventually this red candle here. Let me just increase this. Sorry. So this red candle here, it actually gave a breakdown to the Davos box, and then after that, the prices have started to move in the south direction. So this is another confluence. So this is the fourth confluence of this trade, which says that the markets are trying to go, and markets are bearish, and they're trying to, and the prices are trying to go down. Okay, so this is the fourth confluence. So I mean, as I said, like if we have three confluences, I think it's more than enough. But one thing we need to one thing we need to remember, that in spite of getting many confluences, I would say, like three or four, or n number of confluences, no trade is 100% guaranteed. The confluences only stack the probability of the trade going in our favor. So as I said, like the market is like an, you know there are multiple traders with different mindsets, different strategies, and we basically, looking at the charts, you can try and identify the confluences, and you can try to create your own trade setup based on the conferences. And as I said, that even if you get multiple confluences, that means that you know you're trying to have a edge to trade in that direction. In our case, it's the bearish direction, but nothing is guaranteed that the trade will, or the prices will 100% go down. Some FA might change somewhere, and then the market might just go up. So that is why we always have the stop loss. But the conferences here are telling us that the probability of the price going down is more than the probability of the prices going up, and that's what we try to identify, and we try to take the trade based on the conferences. So we discussed about the conferences, what is the double top, the break in the trend, and the flag. And you know that's why I have put in a trade of 1:3 here, and that is how my trade setup is for this particular uh, charts of wheat. Now one can argue, like because I have drawn the flag from here, Okay, so I have drawn the flag from roughly around, and the pole is quite bigger while my target is quite smaller, and there's a reason for that why I've taken it. So I usually say, 1:3 is always a good ideal trade setup, but based on this flag, the target could be quite higher. So let us see how much the targets would be ideally based on this flag. So it is roughly around, comes roughly around 610. Now the reason I have not put my target at as 610 610 is because of this amber line. Now what is this amber line? So let me just take you back on the charts on the weekly time frame, and I'll show you what this amber line is. Now look at this amber line. So this amber line is basically a uptrend which is forming from right from 2019. And if you look at it, the prices are taking support on this amber line. So I don't want to, I don't want my trade to get destroyed by this uptrend. So if I put my target price at 610, which is just below the amber line, I don't want to come closer, and then the prices bounce on this trend line, and then we are taken off the trade. So that is quite risky. So that, due to that, I mean, in theory the target should be 610, but because of this amber line, which is like a uptrend from forming from 2019, it's a strong uptrend. It's not even uptrend like for few months. It's basically uptrend forming from few years. So we don't know what is going to happen when it when the prices come to this particular try to, if our prices come and meet this amber line, it might the prices might very well bounce. We don't know. So we don't want to take that risk, and that is the reason I have kept the target price at 620 ish. It is just above the amber line. So even if the prices come and bounce off the amber line, it's not impacting us. We are all already taken, we are already out of the trade, taking our profit. So let me go back to the hourly time frame here. Yeah. So that's where, that's where the amber line is. So we are exiting right before the amber line, so does not has any impact on us. So we have to, when you take a trade, we have to look for all those things. So we just can't say, okay, this flag is, the pole is, uh, I mean, as per the flag, I know I'm going to set a target for this pole, which is roughly around this 609. But you need to understand as well, if there are support zones or resistance zones before your target price. So doesn't make sense, like if there is a strong support there, and if you want to put a, I mean, we don't know what is going to happen here. So the best is just exit before the amber line, take the 1:3 trade, and then if you think the amber line breaks, and then you can always try and see different confluences and enter the trade again. So that's the reason I have put in the target price here, uh, just because we have this strong uptrend from 2019. Now another thing which I want to show you is, look at this confluence here. So this trend line here, and then if you join this trend line here, this also forms a flag here, which is a a bigger version of flag. So this is another confluences. So in all, if you look at it, you are getting roughly around this double top, the break in the trend, the flag 3, the Darvas box 5 and 4, and this particular bigger flag as 5. So there are 5 confluences telling you that the price is trying to move, the price is bearish, and it should move towards the south direction. But as we said, we want to do impact analysis of all the risk, and how we can profit from the given setup. So based on that, I have put in a 1:3 risk reward rate, and let's see what happens. Now one more thing which I would like to do, or which I have already done here. So we can see the prices are basically moving in the south direction, and this Darvas box is now acting as a resistance here for the prices. So at the moment, what I have done is I have put my stop loss here in profit. So even if the prices move up, and if I get taken off the trade, I will be always in profit. So that is another good strategy to make sure that if you are in a trade, try to put your stop loss in profit. If you suspect something brewing, like in this case we have this trend line, and buyers might be just looking to see if they want to get into a buy entry and put a stop loss just behind this trend line. So anyways, if the so this is a weekend now, we don't know how the market is going to open on Monday, but for now the stop loss is in profit, and this to me looks like a perfect trade. That is 1:3. My conviction is very high that the prices should be going down and get our target, but we'll see how it goes on Monday, because markets are unpredictable and anything can happen. But in either case, because our stop loss is at the you know in profit near the Davos box here, which is acting as a resistance. So even if we are getting taken out of the trade, we will be taken out in profit. So we don't lose anything. It is a win-win trade for us. 100% a win-win trade for us at the moment. So saying that, I think that's what I wanted to share you about how to stack confluences in your favor. Try to create a trade setup out of the confluences and then take a trade based on the confluences. And this is how you can always try and set up look for a trade setup, and always try to make the confluences work in your favor to have a winning trade. uh, that's it from my side on this particular trade setup. If you find this information helpful, give us a thumbs up. If you please share and subscribe to our channel. If you have any queries, please let us know in the comment section. Thank you for watching, and I'll see you in the next session.